Bloomberg Audio Studios. Podcasts, radio, news.
South Africa and Nigeria are set to be taken off a global dirty money list in just a matter of weeks.
Nigeria has recorded commendable progress under the Financial Action Task Force International Cooperation Review Group Action Plan.
After 2.5 years of heightened scrutiny by the Financial Action Task Force, exiting the list could boost investor confidence in two of sub-Saharan Africa's largest economies.
To secure our removal from the International Financial Action Task Force grey list, we have made significant progress.
On today's episode of the Next Africa podcast, we'll look at how South Africa and Nigeria found themselves on the watchdog's gray list in the first place, and how they've managed to turn things around. I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. Joining me this week is our Africa economics and government editor, Monique Vanek, and our business correspondent, Ben Bartenstein. Thank you both for coming on and for sharing more about some of your reporting. Ben, maybe we can start with you. Can you first explain a bit about who the Financial Action Task Force are and what this so-called dirty money list or gray list actually is for people who maybe don't know the nitty-gritty like you do?
So the FATF, it's a Paris-based multilateral that is really focused on countering money laundering, but also terrorist financing. You could think of it as sort of the IMF for tackling dirty money. The group's membership spans both East and West. You have the US, the UK, the EU, but also China, India, Japan among its key members. And the group sets standards for how both governments and private sector companies can best combat illicit financial flows. But also, the group also conducts country evaluations to really measure two things. One is technical compliance. What are the laws on the books in a particular country to combat AML-CFT? But also effectiveness. How effectively are those countries implementing the laws on the books? So when a country falls short of enough of those metrics, they're at risk of gray listing. And that means they're subject to increased monitoring from the FATF that entails higher compliance costs for banks. And it also really has implications for foreign investments into that country and also for remittances flowing back to the country, as well as kind of a broader impact on the market. We saw a pop in South African bank shares after the news that we reported on South Africa being poised to exit the list in the next few weeks. It's important to also note that there is a blacklist. The key distinction there is that a gray list entails that the country is agreeing to work with the FATF to try to address their deficiencies, whereas a blacklist implies that the country really isn't engaging with the FATF. So there are roughly 24 countries that are on the gray list at the moment, including South Africa and Nigeria, and 3 countries at the moment, Iran, North Korea, and Myanmar, that currently sit on the blacklist.
And so you mentioned South Africa and Nigeria, which is, of course, our focus for the week. When we look back at when these two countries were put on the list, what were some of the concerns? Were they some of the concerns that you were just alluding to there?
Yeah, so some of the concerns were shared around beneficial ownership transparency. This has been kind of a key theme across a lot of the countries evaluated by the FATF, where there aren't the adequate registries to actually show who is the ultimate owner behind a particular company in that country. So both countries shared that as a concern. South Africa also had some concerns around limited success when it comes to money laundering prosecutions, also some questions around asset recovery and challenges that have happened there, and also gaps when it comes to supervision of the banks, casinos, and the property sector. So kind of one of the overarching themes or areas of concern was around corruption and state capture in South Africa. Whereas for Nigeria, there were more concerns around just sort of the lack of terrorist financing prosecutions and also some of the cross-border risks when it comes to cash smuggling. So you could say one of the more overarching concerns was primarily around terrorist financing, especially any risks associated with Boko Haram.
Monique, let's bring you in here and maybe get into the economic hit that these countries maybe saw as a result of being put on this list? We've heard them talk about wanting to exit the list for quite some time. But what have we seen over the past few years, the impact of this listing?
So we have seen some investors being very cautious about investing in these countries, but a lot of them were waiting to see whether they could get off by this year. And the feeling was that if they didn't, that's when the real economic impact would be felt. Where we did see impact was on the banks and other financial institutions, and that the cost of compliance went up. So they had to do more paperwork and get their clients to give them more information to basically transact offshore.
Monique, you were speaking a little bit about the economic hit that we've seen from being listed. What exactly have we seen from the governments, though, of these two countries to instill some investor confidence? Is it at where these countries want it to be, or is there still a bit of work to be done?
So in South Africa's case, interestingly, we saw a big effort by government to work with the private sector to get off the grey list. And what we did see the private sector doing was contributing prosecutorial know-how to the authorities to ensure they could beef up their prosecution cases and also beef up their ability to follow illicit financial flows. And in Nigeria's case, what was also interesting there was that we saw the government appointing professionals to take charge of its anti-corruption authorities. So they both made a concerted effort to try and get off this list. And we also saw them both implementing legislation that allowed them to tighten controls over illicit financial flows and improve supervision.
How challenging has it been for them to achieve some of these goals, Monique?
I think for South Africa, on the prosecutorial issues, it's been very challenging because there's been a lot of court cases against graft that haven't gone according to their favor because they've just been so weakened by previous administrations that effectively hollowed out their ability to prosecute high-profile cases. So that's where the private sector became quite important in trying to just boost the people that they had within their prosecutorial authority to try and get these cases prosecuted.
And in the case for Nigeria, I mean, clearly trying to target some of these terror groups is not an easy task. And especially if we think about the new administration, the Tinubu administration coming in with a number of other priorities, how much of a challenge would you say that's been?
Yeah, I think that's been very difficult for Nigeria. I think they're still trying to deal with the terrorist groups in the north of the country that are consistently proving to be difficult to control.
Stay with us, Monique and Ben. When we come back, we'll look at exactly how the task force makes the final decision and whether these countries can actually expect to stay off the list for a long time. We'll be right back. Welcome back. Today on the podcast, we're talking about the likely exit of Nigeria and South Africa from the so-called dirty money list. Monique, Vanek, and Ben Bartenstein are still with me. Ben, you spoke earlier about this task force and the looming meeting that both of these countries have been waiting quite some time for. What actually happens at the meeting later this month? Will they be assessing some of the progress points that these countries have made? And when will we know whether or not they're definitively off this list?
Yeah, so, I mean, the meeting and in particular the last couple of days of the plenary, which will be happening in late October, that's sort of the marquee moment as far as when we learn about listings and delistings. But really, there's a huge buildup to that moment. It's really a multi-step process. When we think back to when South Africa and Nigeria were originally listed back in 2023, and the steps that have to happen before you get to this moment. First, there's an action plan that's developed with the FATF, in which the FATF kind of charts the course for how they can ultimately get off the gray list. Second, you have this implementation and monitoring stage that includes implementing some of those reforms that Monique was talking about. And then third is the on-site visit, in which FATF assessors will actually go into the country, meet with both government officials, but also members of the private sector, oftentimes huddling with a lot of the key financial institutions in the country to really make sure whether these reforms were actually implemented and get a progress report. Usually that type of on-site visit doesn't happen unless the FATF has really high confidence that a delisting is imminent. So we saw those on-site visits happen in recent weeks. We, in talking with our sources, gathered that, there was significant progress that was attained during those visits. And then when it comes to actually the meeting in Paris later this month, it's really kind of a final ticking of the box exercise, which it's not a foregone conclusion, but they look back at the on-site visit. They look back at all the progress over the 2.5 years in this case. And ultimately, then you have a search for consensus. It's a bit of a secretive process. There's no precise definition that the FATF phrases when it comes to what is consensus, but effectively what it means is that each delegation has a say, and if there's essentially no major noises or opposition to a particular decision, then it will pass through. So usually these decisions are fairly straightforward at this point. So that will become official then on the Friday, which is October 24th.
Wow. And Monique, could we potentially see good news for other African countries that are on the list? What do we know potentially about what else could come out of this meeting?
Yes, we could see Mozambique and Burkina Faso also coming with that list later this month. Both countries have cited that they've met the tasks that they've been asked to deal with by the FATF to get off the list. And interestingly, in Mozambique's case, an official that we did speak to said it could be a game changer for the country if they are removed, because Total Energies has just said that it's ready to resume its LNG project that was delayed for several years because of attacks by Islamic militants nearby its facilities.
And Ben, is that your expectation as well? Potentially good news for these countries?
That's right. I mean, there were recent on-site visits. Our understanding is those went quite well. So that would pave the way for an exit. It's also important to note that under the presidency, FATF presidency of Elisa de Anda Madrazo, she's a Mexican official, there's been kind of a renewed focus within the FATF as far as how they think about these listing decisions. And one area of emphasis under her presidency has been factoring in what the UN calls least developed countries and thinking about the capacity that some of these countries have to really tackle financial crime issues. It's not to absolve them of any responsibility, but it's just to factor in that certain countries have a bit more capacity than others. So that is also now getting factored into these delisting decisions. And also part of that is to kind of take into context that inherently larger economies will have more systemic risk when it comes to if the US or the UK has a gaping hole in its financial system when it comes to money laundering or terrorist financing, that has a more systemic risk than a much smaller economy that is less connected to the global markets.
Are there any conditions, Ben, that these countries have to agree to ensure that they don't fall back on the list? Or is this sort of a foregone conclusion that they're, if it does go as expected, they're off the list? And that's where the FATF's role in all of this sort of ends.
Yeah, it's far from a foregone conclusion. One prominent example was Panama, which actually got off the list in 2016, but was listed once again in 2019. So that was a prominent recent example in which a country, had made progress. The FAT recognized that progress, but then soon after they were listed once again. Of course, a lot of this is contingent upon the FATF's calendar. The FATF actually just completed its 4th round of mutual evaluations and is now starting its 5th round, which means there's a whole kind of chronology as far as which countries are now going to get their 5th round assessments. So some countries are kind of early in the pecking order. In South Africa's case, South Africa could have a possible on-site in April 2027. Nigeria, at least to my knowledge, is not on that calendar quite yet. So that suggests that possibly a next decision on Nigeria could be further out than South Africa. But certainly, the important thing to note when it comes to the 5th round is there are new criteria. So while South Africa is currently being judged on the 4th round criteria, soon after when they come up for their 5th round evaluation, there's a whole new set of criteria and standards they have to meet. So yeah, it's far from a foregone conclusion, but certainly there's positive momentum if they get off the list. It's a recognition from the FATF that the government has really shown political will to, push forward with these policies to counter money laundering and terrorist financing.
Yeah, you can only expect that it will be welcome news for both of these countries if, in fact, we do see the decision being made in their favor. We'll leave it there. Really appreciate both of you and your reporting on this show this week. That is Ben Bartenstein and also Monique Vanek joining us this week. Thank you both so much.
Thank you.
Thank you.
And you can read our reporting on the Financial Action Task Force across Bloomberg platforms now. Here's some of the other stories we've been following across the region this week. Zimbabwe's dollar-only stock market is riding a wave of gains powered by gold miners cashing in on a 48% jump in the precious metal this year. And energy firm Rhino Resources has found gas condensate at another well off Namibia, the latest in a string of discoveries off the coast of the southern African nation in recent years. You can follow these stories across Bloomberg platforms now, including the Next Africa newsletter. We'll put a link to that in the show notes. This program was produced by Adrian Bradley and Tiwa Adebayo. Don't forget to follow and review this show wherever you usually get your podcasts. But for now, I'm Jennifer Zabasajja. Thanks as always for listening.